What I wonder is if the CFPB truly does get shut down, what's going to be the mechanism across not just our industry, because it's payday loans, it's student loans, there's a lot of other industries besides mortgage finance that fall under the CFPB. What's going to be the thing that makes everyone follow the rules? I don't know the answer to that, but I do know that when companies or industries feel like there is no enforcement, there is no rules, I do know that things go off the rails. And the reality is historically when that's happened, the companies can benefit financially, substantially sometimes, and the customer is usually the one to get hurt. So this idea of a consumer protection agency sounds like a good one to me. Now, can we argue about how this CFPB was ran and the amount of control that they had and the lack of oversight that they had? I think all those things are debatable, and I'm frankly not well versed enough to give my opinion on those things. But I can see from my perspective that if this agency gets shut down, it's going to have, and I think at this point, it essentially feels like it's shut down. Dismissing all their cases and telling their people not to work, I think it's already creating a general attitude of, companies can be a little more brazen right now. And I think you're going to absolutely see that. And then what does that look like as we fast forward in time? So I just wanted to bring this to everyone's attention. I would say this is that I hope that at this point, those of us, at least in the mortgage industry, and because that's what I'm in, and we can speak to that, is that I hope that whether the CFPB gets reinvigorated through a new director and, rolls out kind of a new stance on things, or if it goes away completely, I think it's important that we continue to follow the principles that we know are important in this industry. And I wouldn't suggest anybody changing anything. And if you're working at an organization or you're in a position where conversations are being had about how we're going to do certain business practices moving forward, and the idea even comes up, it's like, well, CFPB is not, they're not going to enforce it, right? That's a bad way. That's a bad way to look at things. And I encourage, everybody to stand up for what's right. And for those that are in a position of influence within their organization, or if you even work at an organization and you're like, this doesn't feel right. And I wonder if this decision's being made because there's a feeling like, we're not going to get caught or no one's watching what we're doing. I encourage you to say something because I think we all know when we're allowing things to happen within our organizations that might not be good for customers. And it doesn't matter if you're the person making the decision or you're just a person that's carrying out the task. It really doesn't matter. I think back to around 2008, 2009. I had a friend of mine, someone who wanted to get in the mortgage business and shared with me that they wanted to be in the mortgage business. And at the time, I didn't have a position that I could hire them for. So they went to go work for another mortgage company. And turns out that mortgage company's primary job, the primary product that they sold was that product I just mentioned, the negative amortizing ARM with a prepayment penalty. And they were getting people to refinance out of their 30-year fixed rate mortgages to get this super low negative amortization payment. And they gave them a script. They did not even explain to these loan officers, these salespeople, like how the product worked. They just gave them a script and they said, call these people and offer them, a significantly lower mortgage payment than they're paying now. And it was predatory. Let's just be honest. It was predatory. And I remember this gentleman called me up and he goes, look, I know that you didn't have a position for me, but I really wanted to get in the mortgage business. I went to go work for this other company and I've only been there for a little bit of time, but I'm really concerned. And I said, what do you mean? He goes, well, I'm really concerned with the product that we're selling. And he goes, can I meet with you? And I said, sure. And he actually swung by my office and we sat down and he showed me, the product that he was selling. And I said, well, that's a negative amortizing ARM. He goes, what does that mean? And I explained to him, just like back then when we all had access to that product. I explained that to my customer, and I explained to him how it worked and how the negative amortization worked and how the interest was calculated monthly and could change monthly, but the payment might not correlate with the interest rate and how it worked and the prepayment penalty. And he almost started crying, in my office, and was heartbroken that he was, pushing this product to his clients. And he immediately quit his job and I think went to go work for, a more reputable mortgage company once he figured it out. But that story comes to mind because, we know he knew he was doing something wrong. Now, I don't blame him. He didn't know enough about the mortgage industry to know even how that product worked, but at least he sought out the advice of someone who he thought could, help him understand it. And once he understood it, he took action. And that's the kind of feeling that I think we all have inside of us. We know when we're doing something that isn't right for the consumer, and I encourage you to be that kind of person. Our industry needs that to not go away.